Hi there, I'm Monica Gibson, and with me down the line for the Dukascopy Weekly Wrap-Up is Colin Cieszynski. Colin, let's start with today. Chinese PMI majorly disappointed earlier, falling to a 15-month low, showing the commodity rout is yet another factor hurting the economy and leading some to believe the PBOC need to take more targeted measures, perhaps by supporting public finance. But what more can China really do? And to be honest, should they be intervening so much?
Well, that's a really good question, because in a lot of ways for China, they're in a process where they need to rebalance their economy away from their heavy dependence on exports to building more of an internal economy as well. And so as they move through this transition, their economic growth could slow from the hectic pace of the last several years. The other thing that the PMI data is saying to me is that perhaps the stock market crash in China of the last couple of months or so maybe start having a wider ripple effect on the overall economy. So it's something we definitely have to keep an eye on going forward. Certainly the government may need to come in and continue to support the economy on the fiscal side. The PBOC can continue to support that, certainly through a combination of reserve cuts, of interest rate cuts, and of other measures. They had been fairly tight on monetary policy over the last few years, so they still have quite a bit of room to ease relative to other countries. At the same time, there was also a good question about have they intervened too much, and that may be more on the stock market side. A lot of the measures that they've taken to stop the crash that was going on between threatening to arrest short sellers and putting bans on selling and halting stocks, one has to wonder if that's just putting off the inevitable that when these things come off, could we see more instability and volatility in the stock market? It's hard to say.
Sterling continues to strengthen, much to the dismay of UK policymakers. Diverging monetary stances should gradually lift the pound against the euro by year end, but what do you make of the suggestion that the dollar rally isn't really over yet? How will these pairs perform moving forward?
My feeling is that the U.S. dollar rally is probably getting pretty close to done for now, and what really said it to me was when the jobless claims numbers came out and they were at a 40-year low and the U.S. dollar did nothing, which suggests, even though that's huge evidence to suggest that the Fed should start raising interest rates, but the dollar just didn't respond to that, suggesting that tighter U.S. monetary policy is likely already getting factored into the market. And my feeling on UK interest rate policy is that they'll probably start to raise interest rates sometime fairly shortly after the US starts. So that may continue to support sterling going forward. But in both cases, the appreciation of the currency has done a little bit of the central bank's work for them, because a rising currency, of course, is similar to rising interest rates.
Some say keep an eye on EMs over the summer as sentiment remains fragile. Investor risk appetite will stay depressed in the coming months, and both domestic and external conditions favour weaker currencies, higher rates and steeper curves. Do you believe there will be August fireworks?
Normally, I would say that August is often a pretty quiet month, that a lot of people go away on vacation, and the markets are fairly steady, news flow dries up and what have you, although it's also historically, seasonally, a weaker time for stock markets. But we could get quite a bit of fireworks in August this year, and the reason is because the next round of Greek negotiations are coming up with a fairly tight timetable. They want to. It looks as though policymakers want to try and wrap this up by mid-August and get the money flowing again. So we could still see a lot of Greece-related news coming out in August, with the potential for instability depending on how these negotiations go. August is, I think, going to be more active for news than normal, and of course, with what happens to Greece, could have a significant effect on what people are feeling towards other countries in transition and emerging markets and risk appetite.
A US recovery is bringing a rise in interest rates nearer, and next week's developments could tell us just that. But with the FOMC meeting taking place minus a press conference, what do you think investors are hoping for, and do you think they will get it?
So I think the Street is looking for any indication as to what they might do at the September meeting. The July meeting is pretty clear that they're probably not going to be ready to start raising interest rates yet. At this point, with the market pricing in rate hikes, the surprise could be if they start to back away again from that.
Colin, great to speak with you. Thank you for your time. Well, viewers, find out how all these events and more shape up by clicking back to Dukascopy TV. But in the meantime, have a great weekend.